Hello and welcome to week 8. You made it to the end of the course. Congratulations. And this course is Retail Management, BUS302. This is our lecture video 1. And our topic this week is Retail Management, which you might be thinking, that's the whole class, right? Retail Management. When we talk about Retail Management, we're talking, for this week, we're really going to be talking about some of the odds and ends related to being a general store manager, things that we haven't talked about in the other weeks. So as we go through some of the specific learning objectives this week, is we want to talk about a retail communication program, talk about some of the different things between new media and traditional media, how to acquire and retain employees, some leadership strategies, and some cost control, again, and other issues with HR. So just kind of these wrap up topics related to retail management. So as we go through, the first topic we want to talk about this week is this idea of a retail communication program, which has to do with advertising, yes, which that is paid communication. So whenever we talk about advertising, yeah, that's something we're paying for. But when we talk about a communication program, we are talking more about an integrated marketing communication, which is more comprehensive. It works to really focus on trying to make sure that I'll make sure that we have the same message across all of our channels and all of those things. So this is something that when we go through the retail communication program, when we design this, we need to make sure that we're always consistent. So the first step of this communication program is to figure out what our objectives are. We're going to talk about some specific goals. We need to state our objectives in quantifiable terms, not, random terms, right? So we want to identify our target market very clearly and also really express, what do we want out of this? What kind of change do we want to see? What are those outcomes and the time period that we're going to be focused on? So you really establish your objectives very clearly, very specifically as you go through, right? So you establish those objectives. The second step is going to be establish your budget, allocate, and then we'll allocate our budget and implement, right? So let's talk a little bit about these objectives. Now, as you go through some of these objectives, make sure you talk about long-term versus short-term, product versus location, and the merchandise, right? So because this could become a point of conflict for a vendor or a retailer, a point of conflict for the vendor and retailer, because, depending on what your goals are for the retailer, it might be different than what the vendor's goals are. So, right, you need to be very clear and make sure that, again, you have all these things very clearly stated and everything specified. So as we plan, right, so some of our goals could be that we want to make people aware of the store, make sure people understand the offering, that people visit the store. Some people become regular shoppers. So this would be, as we go through, when we do our evaluation, these could be some of the goals that we have. All right, so let's talk about determining the communication budget. One of the things that you can do is develop a cooperative advertising program. This is where you work with the vendor, and the vendor will pay a certain amount of the advertising, right? So when we start looking at this, if you're going to do some of this cooperative things, right, you're going to increase your expenditure as long as whatever you increase it generates, like if you increase your advertising spend by $1 and you only get 50 cents in return, that's not a good deal, right? So if your sales only go up 50 cents for the $1, you don't want to continue to pay into this cooperative advertising. So if you're going to put in $1, you really want to see maybe $2 or $1.50 more in sales, right? And this is something that could be hard for management to really focus on, because a lot of times store level managers don't know what what the advertising expense is, right? So, or they don't know how to measure that connection between what we're spending and then the sales. So this could be a hard area to measure, but it's something that you do want to watch to evaluate, right? So when we start looking at it, you can use this type of spreadsheet. There's an example in the textbook on this, right, to look at, so you can see some of that and map things out, right? But this would be one way to do it. The other thing that you want to do is look at the objective and task, right? So take your budget and say, okay, this is the task we want to accomplish. So we're going to spend money on this one task, and then you measure that particular task outcome with your budget. That would be a really focused area. For example, right, the objective to increase the percentage of target market working women who know of our store's location and who purchase business attire from 25 to 50% over the next 12 months. Right. So if the task, right, so that's our objective. So what we do is we take 480 30-second radio spots during peak commuting hours, and we spend 12 grand on that. And then we also have a sign with the store name near the mall. That's 5,000. Right. We can measure those specific things. So we tie our budget exactly to specific objectives. Right. So those are things that we would be able to track and see. Some other things that you want to do with your budget, right? Take a look at your past. What did you do in the past, right, to set your budget? Make sure that your budget's affordable, right? Maybe use a percentage of your sales, those kind of things. And the other thing is, don't assume that when you spend money on advertising, it's going to create sales and profit, because it might not. You have to really track this and make sure that you're focused on measuring the outcomes, right? So this is one of those things. As you're doing that, don't just assume that you're spending money and your sales are going to go up, right? So find some ways to track it and evaluate, right? So again, you can look the last year to this year, measuring those sales and everything else. Another way to evaluate your budget. And so now, once you've set the budget, you need to allocate the budget. So let's say we have this budget and we say, okay, now we're going to go through and we need to spend this budget, and we're going to spend it on certain categories or maybe certain geographic areas, right? And then don't forget, you do have your objectives, so you have to allocate it there. So as you start doing this, the key is that you want to allocate your budget to the areas that are going to give you the biggest return, right? That high assay principle. And advertise the areas that are going to bring you the greatest return, the highest return on your investment. That's just good business. So as you start looking at this, some things that you can do, right? An advertising campaign, you can look at, these are some illustrations, right? From Fabulous Fromage. It was creative, distinctive. You have some communications objectives, selling imported cheese, those kind of things. They went through and they had the awareness before the campaign. It was 38%. They measured it. It was 46% after, and then 1 year is 52%. And again, as you go through this process and you're evaluating, right, you got to decide, okay, did this work? Did this not work with our budget? So you're allocating those areas. Let's see here. And then part of this, the marketing campaign, they had a Facebook marketing campaign. They established objectives. They developed the budget, right? So on and so forth. This is what it looked like. So now you can measure and look at those things and see the daily reach, see how that's working. And then a Google AdWords. So the target market, again, young men and women. We go through these things over and over again where you're trying to hit these reaches. So you have your target market. You use your search engine for Google AdWords, estimate your reach, click-through rate, get your return on advertising. And that's as you go through that process, right, you're going to be looking at and evaluating, right? This is how you would show up with the Google AdWords. It would show up on the screen, pop up. And then we could see the cost, right? So the keyword, New York gourmet cheese, the number of clicks, the cost, the sales, right? So if there's 110 clicks at a cost of $10 per day, sales is $35 per day. We have revenue minus our cost. This is an additional revenue of $25, right? So that's a return on investment of 250% versus using imported cheese at 40 clicks, 20, right? So this is where you could measure the return on that. Whoops, a little too far. So these are things when you start planning your retail communication, you have to think through what's those goals, what are the objectives, what's my budget going to be, and how am I going to evaluate it? So as a retail manager, this is a really important part of your job, is looking at that integrated communication plan. So with that brings us to the end of the first video. We go through. We have video number 2 up next.